A warm welcome to all viewers tuning into the Corporate Finance Talk Show. I am Ming Tu, and I am thrilled to accompany you in today's program.
Hello, Ming Tu, and greetings to our audience. I am Huan Kui, truly honored to be here to share my knowledge on corporate law and taxation.
Mr. Huang Kwai, today's topic is, when a Singapore company transfers shares to another Singapore company, does this transaction trigger any tax obligations?
Generally speaking, for standard holding companies, this transaction is basically tax neutral. Both the seller and the buyer enjoy their own specific advantages in this process.
That makes sense. Let's dive into details for the Singapore company seller. Are they subject to any capital gains tax or corporate income tax for this specific transaction?
Singapore does not apply capital gains tax on assets that are capital in nature. Corporate income tax only applies if IRAS considers it a trading in shares transaction.
Trading in shares means frequently buying and selling for commercial profit, right? Does the tax authority, IRAS, provide any specific rules to protect sellers in this case?
Yes, IRAS provides the Safe Harbour Rule, or certainty of non-taxation. The data for the period from June 2012 to the end of 2025 has been promising and will continue beyond 2026 with key updates.
What are the specific conditions for this Safe Harbour Rule so that the selling company can be absolutely certain they won't be taxed, Mr. Huang Kui?
IRAS will not levy tax if the divesting company has held at least 20% of the ordinary shares continuously for at least 24 months right before the sale.
Just to clarify, are there any exceptional scenarios where this Safe Harbour Rule would absolutely not be applicable to the selling party at all, dear expert?
If the seller is an excluded divesting company trading shares or selling shares in certain property holding entities known as PHEs, this rule might not apply.
Understood. Now, shifting our perspective to the buyer, the Singapore company buyer, do they have to pay any corporate income tax on this share purchase transaction?
Buyers do not incur income tax when purchasing shares. However, they must pay special attention to the registration tax, professionally known in Singapore as stamp duty.
How exactly is this stamp duty applied in practice? Is the calculation method for ordinary shares complicated to understand and execute?
For ordinary shares, the standard stamp duty is 0.2%. This rate is calculated on the higher of the actual purchase price or the net asset value, the NAV.
Earlier, you mentioned property holding entities, or PHEs. If the target company is a holding company primarily owning real estate, does this stamp duty rate change?
Yes, a massive change. If the target company mainly owns residential properties, Additional Conveyance Duties, or ACD,
may apply, making the entire transaction significantly more expensive.
So the transaction becomes much more costly. Are there any specific stamp duty reliefs or exemptions available, especially during internal corporate group restructuring scenarios?
Stamp duty relief can be applied for corporate restructuring. However, the conditions are extremely strict, such as proving a 75% association for at least 12 months.
One more question regarding the Goods and Services Tax, or GST. Does this entire share transfer transaction actually fall under the scope of GST liability?
Our viewers can rest assured, the transfer of shares is legally treated as an exempt supply, so it completely falls outside the scope of GST applicability.
In summary, for standard holding companies, share transfers are tax neutral, but businesses must pay very special attention to trading scenarios and property holding entities, the PHEs.
Absolutely correct, Ming Tu, and companies should never forget the 24-month holding period to enjoy the Safe Harbour Rule in order to optimize their tax obligations.
Thank you for these incredibly valuable insights, Expert Huang Kui. We hope today's program has brought highly useful information to our business representatives tuning in.